Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN Sunday podcast for members of the media, academia, and financial services come together to analyze all the news in retirement markets, technology, personal finance, and so much more. We've got another great show for you this week, and we've got a very special guest. Craig Lazzara from S&P Dow Jones Indices is going to be joining us. Talk a little bit about the markets, and we'll also talk about the stimulus package, I'm sure. So sit back, relax, and enjoy this episode of the BRN Sunday podcast. Well, we're going to kick things off with a look at healthcare, and who better to do that? She is a correspondent with Business Insider in the healthcare and reports on healthcare issues, Miss Lydia Ramsey. Hi, Lydia. How are you?
Good, hanging in there.
Yeah, that's good. I know it's not easy working from home, but you do that from time to time, and I'm sure you're used to kind of telecommuting.
Mhm.
So let's check in. You've been doing a lot of writing and following you online, and I should also point out that you are the editor of Dispensed, which is a healthcare newsletter through Business Insider that people can sign up for, and it's also available on the LinkedIn platform. So what's top of mind for you? You're covering all these issues. What can you tell us about the response to the pandemic, everything that you're hearing, et cetera?
Yeah, I mean, this week we saw a bunch of really important updates. The U.S. has surpassed China and Italy in total case count, which is pretty striking and important to keep in mind. I'm based here in New York, and that's shaping up to be one of the big centers, one of the hotspots
Mm-hmm.
of the pandemic. We account for it was as of Monday, 6% of global cases. And one of the things I've been following this week has just been how slammed the hospitals in the New York area have already gotten, and we're not even at the peak case count yet. So that has been really, tough. A lot of folks who are going to get the virus are going to have pretty mild symptoms.
Mm-hmm.
So, even if you're just feeling like you have a cough at this point in New York City, you don't need to come in and get tested. They really want you to stay home, monitor your symptoms, come in only if you need to from a medical perspective. So that'll be really interesting to see how that changes. Testing regimens over time will probably keep changing. But right now, a lot of the hospitals are seeing the sickest of the sick, and
Mm-hmm.
that is really bringing up some hard questions about where do we find additional space? Where do we find additional staff? Where do we find additional, a lot of these folks need really intensive equipment to keep them breathing. So finding
Yeah.
that is all big issues.
Yeah, and I would just point out, I mean, I have been watching, and I'm sure you do the same thing every day, the press conference from the virus task force, and I really find Dr. Fauci and Dr. Birx, I mean, they're amazing, but I learn a lot of information there as well as going to the CDC website, and I think the Johns Hopkins website. I mean, that seems to be really good information, in addition to what I, of course, view in the dispensed newsletter. I hear the dog. I hear the dog. He's excited.
Sorry about that.
No, it's okay. It's okay. But getting information really important, and getting the right information, to your point, really important, right?
Yeah, absolutely.
Um, let's talk about, what before all this happened, when we would check in with you, we'd be talking about startups, or we'd be talking about companies that were doing innovative technology. My sense from, just hearing the news and, checking in, like I said, with Dispensed and the task force, is that there are a lot of companies out there that are kind of reconfiguring their plants, reconfiguring their processes to create things like masks, or create things like shields, face shields, or testing elements. Is that your sense?
Yeah, I think this pandemic is going to change every corner of our society, whether we like it or not.
Yeah.
The things that once are normals like 4 weeks ago are not the same as they are today, and I think every company is grappling with that in its own perspective. You're seeing a lot of folks have to close, have to make really hard decisions around
Mm-hmm.
layoffs. The news business is for sure going to hit pretty hard. We saw that with the 2008-2009 recession. And so I think a lot of folks are trying to figure out what role they can play in this pandemic right now, because it's really hard to watch this and know the impact that it has on the economy without feeling like you're a part of something. A lot of folks, a lot of projects, a lot of pitches I had that I was pursuing before February 28th have now kind of gone out the window. So I think everyone kind of feels that pressure, feels that responsibility to join in. One of the things I'm curious about is how much of an impact they're going to have. We've seen a lot of online startups, create little assessment tools that are for coronavirus, which is great because it ideally should help keep people out of the emergency rooms unless they absolutely need to be there. And that should lessen some of the load for healthcare workers and things like that. Some of the stuff that's going on in factories is great to see. You've seen Elon Musk be pretty vocal about his ambitions to make ventilators. I just hope it comes in time. I think the shortage of protective gear is real, and it's already here in New York. And hearing from folks this week, it's already an issue. It has been for weeks. So whether or not any kind of efforts to transform factories helps pay off, I hope that is the case. I really do.
Yeah, absolutely. And the other thing that I can't believe that we're even talking about this, but there have been some bad actors. I mean, there's people that are, there's scams, right? So people are creating scams in order to pass along bad information, bad advice, and that's why I reference going to things like, proven sources like Dispensed, CDC, Johns Hopkins to get or your state local website to get information. I mean, it's hard to believe, and there's also people kind of hoarding things, which, and obviously in difficult times, that's not a good thing as well.
Yeah, I mean, I think, in times of crisis, you always hear stories of bad actors, whether it's a hurricane or an earthquake or a pandemic in this case. So it's not unsurprising, but it is really troubling. And it's what's really troubling is the misinformation around how serious this is. You've seen folks kind of come out and address it. Even the president, as of a couple of weeks ago, was not taking it quite as seriously as he is today. And so just making sure everyone is on the right page about how serious to take this, what to do if you're experiencing symptoms, that's things like fever, cough, and shortness of breath. It's really important to do your part and be part of this, because this is going to be our lives for the next 18 months. This isn't some short, quick thing that a scammer can jump in and jump out of in a matter of days. It's going to be something where those kind of impacts are going to be really prolongedly felt.
Yeah, it's a shame that you have to deal with that, but I think in every circumstance since the beginning of time, when you've had these major issues, whether it's health or a hurricane, you always have some bad actors that I guess they put aside their ethics and their morals and do those types of things. Well, I mean, I guess I am optimistic that we'll figure this all out. It seems like the private sector is stepping up. It seems like people appear to be social distancing and doing the things they need to be. We saw even the spring breakers come home, right? And the kids, staying in, so they're not having coronavirus parties, which is I think a good thing. So I guess more to come on that, and hopefully we can slow the spread here.
Yeah, I hope so. I feel like in New York it was shaping up to be clearly too late. We're seeing pretty endemic community spread here in the city, and I'm just hoping that we started going on these social distancing measures and some real effort about 2 weeks ago, as did most of the rest of the country. I'm hoping that other countries, by doing it as that early, before they were seeing tons of widespread community spread, hopefully it keeps their case counts down. I think we're starting to see that not be the case with places like New Orleans and Atlanta and Miami. But here's hoping.
Yeah, I mean, do your part.
It's going to be a rough couple months.
Yeah, I think so. I don't think this ends in 2 weeks, like you said. I think we need to reset our expectations societally to say, hey, this is going to change everything, and we're not going to just go back to life as usual. To your earlier point, I think this is dramatically altering the way we do everything, from the way that we're using Skype. I'm using Skype to call you, and people are using Zoom, and I think that could be the future of business. That'll be the future of you even see TV people, Lydia, who are broadcasting from their homes. So they have a camera. And I really see this as a humongous paradigm shift, not just with healthcare, which obviously is the most important issue now with health, but kids and schooling and adults with telecommuting. So I think you're absolutely right. Well, it's always a pleasure chatting with you. Stay safe. Always look forward to my edition of Dispense that I get every Friday, correct? It's every Friday afternoon, early afternoon, right?
Yep, got to get it out this week.
Okay. Take
Be
care.
coming soon.
Yeah,
All
take
right.
care, and we'll talk to you very soon.
Thanks so much.
Bye.
Bye.
Welcome back, and now we're going to shift gears, talk a little about what some of the social media trends are with regards to this week in finance. And joining me now, Devin Banerjee, Senior Financial Services Editor for LinkedIn, and he's also the editor of the This Week in Finance newsletter. Devin, welcome to the program.
Thanks, Jack. Always good to be with you.
Yep, and did you like how I kind of segued right into This Week in Finance in terms of announcing? There you go. I try to tie it back into your newsletter, which I think is a great periodical. So a lot going on. I know you're working from home. We chatted on Friday about some of the stories, the stimulus bill, the pandemic impact on credit cards. But what's top of mind for you and the team? You guys do a lot of work all day long. So what's top of mind?
Absolutely, Jeff. Looking at our data and readership, the stimulus bill, especially here in the U.S., is really top of mind for people. Everyone basically dissecting what it could mean for them. So I'm just going to run through some of the top provisions in the bill that people are most paying attention to. Number one, of course, are these direct payments to Americans. So that is $1,200 in direct payments to taxpayers with incomes up to $75,000 a year, and that phases a bit lower up to those with $99,000 a year. Also $500 for every additional child. Significant expansion in unemployment benefits to 13 weeks. A lot of people are paying attention to that, especially as we see now millions of people, unfortunately, filing for unemployment benefits because of layoffs and furloughs related to this pandemic. Federally guaranteed loans to small businesses that pledge to retain workers, really important provision there, especially that condition or allowance for businesses to retain workers. So those loans will help them do that. Of course, a big fund for corporate loans and some industry targeted loans. So if you think about airlines and hotels as well. So that's important. And, for those who are really watchers of what's been happening in the capital markets the past couple of years, one important provision in that last point is that stock buybacks will be forbidden for those recipients of that assistance for the period of the assistance and for 1 year after the assistance ends. So that's a really important provision as well. And then the last one I'll mention, very important, probably the most important one, is a good chunk of aid, about $100 billion for hospitals and health systems nationwide. And so that includes aid for protective equipment, testing supplies, which are really lacking, of course. And I was just trying to look through the bill. Of course, it's 800-something pages. But something I'm curious that whether you're watching, Jeff, there are some provisions regarding 401ks.
Yeah.
So I'm just looking at some high-level takeaways here. I would encourage people to, of course, read the text closely or check with an advisor on this. But it looks like investors of any age can take as much as $100,000 from retirement accounts this year without paying that early withdrawal penalty. They could also avoid taxes on that withdrawal if the money is returned to the account within 3 years. And also a provision about RMDs, or required minimum distributions. So as hopefully most people know, when you reach retirement age in your early 70s, you are required to start taking that money, which is a taxable event. You're paying taxes on those distributions. And this bill would waive those taxes in 2020 on distributions, and actually waive the requirement to start taking those distributions this year. So yeah, I'm curious, Jeff, what you think about that.
Well, I think it's certainly, and you did an excellent job summarizing those, Devin. I mean, I think it's necessary and important. You don't want to force people, when it comes to the RMD provision, I don't think you want people to take money out, because the RMD is calculated based on the 1231 balance. Okay, so you take the 1231 balance, you then go to the uniform. Generally, it's a uniform life table, and you figure out, and then you take that amount out. But because balances presumably were higher on 12/31 of 19 than they are now,
Yeah.
it would be a greater percentage of people's account balances. The other thing, Devin, is I think we're waiting on guidance from the Internal Revenue Service to expand
Mm-hmm.
the disaster hardship. When we've had hurricanes, Sandy and
Yeah.
other hurricanes and events, there's disaster relief in the form of hardship withdrawal, so there's no penalty. Typically, when you take a hardship withdrawal, so first you take a loan, then you take a hardship, there'd be a 10% penalty that you would pay. That looks like it will be, as part of this expansion, it would be eliminated for these types of hardships. So I think these are good things. The thing that I go back to, Devin, and I think, look, I think it's necessity. We don't want people taking money out of their savings account if they can avoid it.
Definitely.
And my concern, and we covered this on Friday with your really astute coverage of the pandemic and the credit cards and all and whatnot. My concern is that people just get completely thrown off the savings train by this. I mean, trying to pay your bills. I mean, everyone now, including myself, we're thinking short term, right? I mean, how do we survive till next month, or how do we survive to the next week? And that totally has a chance to really take us out of the savings mode that many Americans, I think, we're starting to begin to believe in.
That's absolutely right. And I would go back to what you and I talked about on the network 2 weeks ago, which is some really good advice that we collected from financial advisors. And number one there is avoiding action bias, avoiding the susceptibility to to feel like you need to take some action just because action is occurring around you.
Mm-hmm.
And for those, as you said, Jeff, for those who are on a savings plan, who have built those emergency funds, who have contributed to the 401k over time, if you don't need it, don't fall susceptible to that action bias, and don't try to take action just because you think you should be taking action. So again, consulting advisors or just going back to your original investment and savings and budgeting plan is very important. Of course, I just brought up these provisions because they're quite unique. They're reflective of some of the provisions that were put in place after the 2008 financial crisis. So it's interesting to see those come back.
And it's now. Oh, I'm sorry, Devin. Go ahead. Finish your thought.
No, go ahead.
I was going to say we're talking. We always do this on Friday, about 1 o'clock Eastern time, and I'm looking, and it says the House is set to vote on this bill. So we're talking about something that cleared the Senate. It looks like the House is going to take it up, and hopefully by the time people are listening to this on Sunday, it will have passed, and we're on to the next thing. Because I don't honestly, this is the third stimulus bill, Devin, but it's my sense, and I want to get your perspective on this. I think we're going to get quite a few more. It looks like.
That's right. There are calls from the wisest minds out there, if I can be so generous. There are calls for additional stimulus. Of course, this will provide runway and relief. We hear from a lot of small business owners and operators on the platform on LinkedIn. They're saying this could provide relief in terms of their expenses and payroll for maybe 2 months, maybe 3, if they're being generous, and depending on the shelters in place and other safety measures, which are of course required. Depending on those, this could stretch way past that. So yes, there are calls for additional relief, and we should see, we should keep an eye on that.
Yeah.
And on that note,
Sure.
The last thing I wanted to mention is, I'm trying to look for an optimistic note because I know you're an optimist, Jeff.
Try to be.
But on the platform, we're seeing a lot of interesting kind of flashes of high quality leadership, if I can call it that. And I think this is a time when a lot of people are seeing the true nature of corporate leaders and other leaders in society. And as people think about where they work and companies and the values that are important to companies and their leaders, which, I talk about a lot, I just wanted to point people to a couple of the companies that are coming out and pledging no layoffs, or those who are pledging to make employees whole if they're reducing salaries, or those who are pledging to rehire, those who are choosing to furlough rather than lay off. So just, an optimistic note, people can find those stories and instances of that leadership on LinkedIn, where we're featuring the news at the top right of your home feed. There's one post I'm just looking at right now that is absolutely blowing up from Al Kelly. He's the CEO of Visa, and he pledged to his 20,000 employees that they will have no COVID-related layoffs in 2020. But we've seen that from other big institutions. I follow the financial news most closely. We're seeing that from some big banks, interestingly. So just for people looking for a light at the end of the tunnel, there's a real step up in leadership out there right now.
And I also saw, Devin, that some CEOs were not even taking their salary or reducing their salary. So
that's right. We've seen instances of that in the airline industry, and some are reducing their entire C-suite colleagues' salary by as much as 50%, and some CEOs are waiving their salary for the year. Absolutely.
Yeah. Well, let's hope that by the time this airs, Devin, that we get a passage of a bill and we're on to the next thing, and the market reacts positively. We had 3 really good days, and I know things were down a little bit, I guess, because some doubt had creeped in. Imagine that. Some doubt had creeped in.
The market reaction is quite a roller coaster. I'm trying not to follow it day by day, but we actually saw the bear market that we had entered early this week. We saw that end, and we entered a bull market yesterday, which was a 20% rise off the recent lows. And so it's just flipping back and forth, Jeff.
Yeah, it's we're talking a little bit later on to Craig Lazara, managing director from S&P Dow Jones Indices. Be interesting to get his perspective on all this incredible volatility. But as we always say to the listeners, and we try to advise each other, if you turn off the news or you try not to follow this stuff, think long term you'll be in a better place, even though that's a difficult thing to do. Devin, always a pleasure chatting with you. Stay safe. Always enjoy reading the This Week in Finance newsletter, which you can find under Devin's name, Devin Banerjee, CFA is his designation, and you can subscribe on the LinkedIn platform. Devin, take care, stay safe, and we'll talk to you next week.
Stay well, Jeff.
Welcome back, and we've got some really good news. And joining me now on the line are our friends, the Legal Eagles, David Levine, Kevin Walsh. Both are principals with the Groom Law Group, an employee benefits law firm based in Washington, D.C. Gentlemen, how are you? Gentlemen?
We're doing pretty well, Jeff. Thanks for having us on. I mean, it's always fun, and I'm glad you got Groom instead of Grom. Grom does better gelato, but we do better benefits.
And I am deep within my cave. I was supposed to do the hello, but I am deep within my cave, sheltering in place. So as a result, it takes me a minute to take it off mute. In other words, I'm doing what everybody is doing on their conference calls, talking into mute.
Well, it's great. First of all, it's great to hear your guys' voice. I hope you and your families are doing well. Let's start there. But I understand, Kevin, that we do, as of 2:13 p.m. Eastern Time, a deal has been struck. The House has passed the bill. But what can you tell us? Why don't you fill us all in?
Well, so I think the key here is, because this is going to come out on Sunday, letting people know that even if it's still morning time on Sunday, the bill has already passed. So Friday, Thursday, there was a little bit of skepticism about whether or not they were going to be able to get the bill done before this program airs. They were able to get it done. Just as some background, for the last week, maybe week and a half, Congress has been working on a COVID-19 economic relief package, recognizing the impact that it was having on the economy. I mean, you look at this week's jobless numbers, and wow, kind of the unemployment stats were numbers that hadn't been seen before. So last weekend, kind of there was a sense that Congress needed to get something done before the markets opened on Monday. Well, I mean, using Congress time, they managed to not do that. But as the week progressed, they got closer and closer to having a deal. Ultimately, the Senate was able to pass legislation spending north of $2 trillion, 96-0 on Thursday. And the bill went over to the House then Friday morning. Mm-hmm. There had been some speculation that Reps Massey or Rep AOC on the Democratic side and one on the Republican side had each talked about forcing essentially half of the Congress people to come back to D.C. To be there in person and to do a roll vote on the legislation. On Friday afternoon, neither member kind of made the objection. So the bill was able to pass by voice vote. Hopefully by the time this airs, President Trump will have signed the bill. Every indication is that he's going to sign the bill. Now, it focuses primarily on non-retirement related issues. I mean, it's got checks for Americans, it's got loans for small businesses, it's got loans for big businesses, but there are some significant benefits related provisions. So David, do you want to take it from here?
Sure, absolutely. And this time I planned ahead to get off mute. And a couple things. First, the bill follows the well-trodden route that we've seen on retirement relief for distributions, about expanding the size of loans up to the full account balance. Similarly, what it also does is it expands the hardship distribution by creating a whole new type of distribution. It's not just a hardship now. It's a coronavirus related distribution, much like we've had disaster distributions, where you can take out money, you can repay it in up to 3 years. It really is an expansion of what is allowed in terms of distributions, but Gesundheit, it follows a lot of sort of the framework we've seen for other hurricane and disaster events. That's the first step on this. Number two, for required minimum distributions, just like we had back in 2009 in the last crisis, we have legislation that says you don't need to take a required minimum distribution from a defined contribution plan for 2020. So it allows you basically to say, skip this year, keep on going on the track after that, but it does not talk about defined benefit plans. Number two, so that allows people who've had their accounts drop a lot not be forced to take more money out. Number three, on the pension funding side of the house, and there's other things, but these are kind of core items. Number three, and the last thing I'll hit, is it also does say for people who have funding obligations that are due to their pension plans this year, you don't need to make it, but they're pushed into next year. It doesn't permanently waive everything, but it does basically say you've got more time. What's not present is a good thing to note. There was talk about other provisions being in there, for instance, more comprehensive pension plan funding relief. There were different versions that had it in there, and I can leave it to Kevin to comment in a second on that. But they're not in this version. But there is already talk of a wave 4. And Kevin, maybe you want to talk about Speaker Pelosi's comments or anything else?
Yeah, I'd be happy to, David. And I just went through that experience you had earlier with the mute button in light of this. But I think there's some sense as we get into COVID 4, 5, and 6 relief bills that one thing that's been on the agenda for a substantial amount of time on Capitol Hill is shoring up the multi-employer system and also making the rules make more sense in the more solvent single employer space. And kind of in one of the House versions of the bill, or in the House version of the bill, there had been pieces that addressed both of these issues. It's going to be interesting to see how those provisions kind of get reintroduced in future pieces of legislation. My take is that they would need to be offset with a pretty significant win for Republicans if they're going to pass. But we'll see. I mean, it's an issue that's not going away. And with the economy and the markets being where they are right now, defined benefit pension plans aren't getting on better footing.
Yeah. Well, guys, certainly very good news on this late Friday afternoon. Really appreciate you guys kind of breaking it down for us, and I'm sure we'll be talking more about future legislation and what's going to happen going forward. But baby steps, right? Baby steps, and that's what's important. Guys, have a really pleasant. Go ahead, David.
No, and I was going to say, Jeff, thanks for having us. For after years of telling you RISA and then Secure would pass, now we're just getting serial bills. What our big fear is, and hopefully this all ends, which is good. But then we're going to get to go back to the discussion of we promised legislation is coming, and that'll give us 5 years worth of shows on the Morning Pulse.
There you go. Well, guys, thanks so much. Be safe, and all the best to you during this very challenging time. We'll talk to you again next week.
Thanks for having us on. Talk to you next week.
Bye-bye.
Bye, Jeff.
Welcome back. We're joined by a very special guest. I've got Craig Lazzara on the line. He is a managing director with S&P Dow Jones indices. Hi, Craig. How are you doing?
Great, thank you, Jeff. Glad to be with you.
Yeah, happy Friday. It's been
Yeah, indeed.
quite a tumultuous couple of weeks. I'm glad we had an opportunity to check in. But first, let me ask, how are you and your family and your coworkers doing working from home?
I think we're fine. I mean, we're certainly as well as can be. We're doing as well as can be expected. I think the thing that is remarkable about this, and I'm going to show my age when I make this comment, I know, is that if this had happened 30 years ago, it would be we would shut down. I mean, there was no internet to speak of. There was no email. There was no way to keep in touch. No way to have the kind of call I'm having with you now. And you know, the fact that I suppose if this had to happen, it's a blessing that it happened now and not 30 years ago, because people can get a lot done remotely. It's not as efficient, I don't think. Certainly not as much fun when you can't see your colleagues. But the indices are still being produced, and research is still getting written, and meetings are still being held, although virtually. So I think we're doing just fine.
Yeah, I think this could be a paradigm shift for the way a lot of people do business, and I think in companies like Zoom and Skype are seeing a tremendous amount of activity. So good for them, and hopefully we can make some advancements. But what I wanted to do, putting aside the health aspect of this, which is so significant, and as we're talking about this, I mean, we're right. You work out of the New York office in
Yes.
downtown financial district of New York,
Yep.
but you're working from home, obviously. And I live in Jersey City, but New York has become a hot zone. And so I want to set aside that health element because it is so serious. But let's talk about your perspective financially or economically in what you're seeing with all this happening.
Well, the thing that I'm not particularly a student of Russian literature or any literature for that matter, but there's a famous quotation from Tolstoy that begins Anna Karenina, and the lines are something like this: all happy families are alike. Every unhappy family is unhappy in its own way, and bear markets are like unhappy families. They're all unhappy in their own way. The technology bust 20 years ago was different than the financial crisis 10 years ago, and both of them are different from what's been going on the last month or so. The most distinctive thing in my mind about what has happened in the markets recently is the incredible speed with which things have taken place. And if the bottom was Monday, March 23rd, and it's the bottom for now. I hope it stays the bottom, but we don't know that until some time has passed. But if you say that the bottom was March 23rd, then the decline from the peak, which was clearly February 19th, was about 34%, almost 34% on the S&P 500, and that took just over a month. If you lay that over comparable data from the financial crisis, or the peak of the market in, I believe, October 2007, the market declined some 55%. But it took more than a year to go down the first 34. So in other words, we have done in a month now what took just over a year in the financial crisis, so the speed is really quite remarkable. Now, if you think about it from an economic standpoint, I suppose, I guess I'm inclined to say that's not all that surprising, because if you think back to what was October 2007 when the market made its top, like what was going on then? Well, Bear Stearns was still alive, Lehman Brothers was still alive. There were rumblings of problems in some fixed income mutual funds, I believe, that Bear Stearns operated. That had started in early 2007. But the degree of the problem was yet to be, I think, fully appreciated at that point. In contrast, you come forward to now, say a month ago. It's very clear what the problem is. There is this virus, the only known control for which at the moment seems to be putting entire economies under house arrest. So people can't get out and go to work. Therefore, unemployment skyrockets as the claims came out. We're recording this on a Friday morning, so yesterday claims came out record level. One of my colleagues said it was a 200 sigma event. So huge unemployment claims. It's not clear how long this suppression in economic activity is going to take. But the fact that it has happened and it was going to happen was very clear. The cause was clear, the effect was clear. And what did the market do with that? Well, obviously, the market said the economy is not as good as we thought it was in January and early February, so we're going to begin marking prices down, and that's exactly what happened. So given the clarity of the cause, the speed of the reaction maybe shouldn't be a great surprise. The other thing, or one of the things that we look at in our research is not only levels of volatility that we've been discussing, but also the components of volatility or the way in which volatility manifests itself. And there are two main strands to that research, or two main components, I should say, to volatility in our research, which are we call dispersion and correlation. Now, dispersion is the less well known of the two. When I say dispersion, what I mean is what's the degree of difference among the returns of the various stocks in the S&P 500. So, for example, if there's a very wide disparity between the best performers and the worst performers, we say dispersion is wide. If there's a very narrow channel into which most returns are falling, we'll say, well, dispersion is quite narrow. And parenthetically, since roughly 2011 through the early parts of this year, dispersion had been below its long-run historical average. So stocks were moving in a relatively tight channel. Historically, what we've seen is that really bad markets only occur in the presence of really high dispersion. So even as recently as the middle of last month, dispersion was kind of at average levels. And if you'd looked at that, and I did this actually, I confess that I actually wrote this down and published it, that as of the middle of February, that was not what bear markets looked like because dispersion was quite low. Two things have changed since then. Of course, we've got a whole another set of months worth of trading days to do the analysis with. Dispersion has gone up dramatically, not quite as high as it was during the technology bust, but almost that high. And correlations have skyrocketed to literally record levels. We've never seen them this high. When I say correlation, the other component of volatility, what I mean by that is the degree to which stocks in the S&P 500 go up and down at the same time. Unfortunately, they've been going down most of the last month, but they've all been going down together. Now, if you think about the economics of that. You have a pandemic of unknown severity and unknown duration. It's pretty clear that with very, very few exceptions, every business in the country is going to suffer. So it's not surprising that correlations are going to be high because all stocks are going to react, or the vast majority of stocks are going to react in the same way, which of course until recently has been downward. And so you see this skyrocketing of correlation and also very high levels of dispersion, again, which has taken place very rapidly. I mean, the level of correlation, the growth in correlation that we saw over the financial crisis took much more time to evolve, whereas what we're seeing now took place literally in the space of a month. So it's been very, 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 very rapid and quite sudden. And again, not surprising, given the nature of the economic backdrop.
Yeah, absolutely. And I think that velocity by which the drop has occurred has scared, obviously for obvious reasons, scared many individual investors, people in their 401ks and their pension plans.
Yes.
And what I want to, before I get into the long-term investor, I want to go back to a conversation that you and I had back on the television network back, and I think it was late November, early December, and we talked about active versus passive. And what I wanted to get is a frame of reference from you. Typically, when you have this volatility, and I know this is historic, the velocity is historic, but if you're an index investor, if you're an exchange traded fund, or you're in the S&P 500 or the 400 or one of the other indices,
Yes.
what can you think about from the long term? Looking at historical events, right? Because nothing's going to be exactly like this, but we've
Of
had
course.
similar drops.
Yes, and I think that's a great question. If you can answer it in a number of ways, and they all get you more or less to the same place. But if you come back to the analysis that I mentioned a moment ago about levels of dispersion and levels of correlation, you ask, when has the market been like this historically? And our data go back on this to the early 1970s. And again, this is a very unusual environment, not surprisingly, but there have been other environments of high correlation and high dispersion together. Going back to 87, obviously, which was October 87 was a bad year, and as recently as 2011, there are 11 episodes that we identified that are sort of like where we are now in terms of dispersion and correlation, and in every one of them, the market was higher a year later than it was in the month of peak correlation. The average increase, I think, was something like 20 or 25, 24%. So if you make the assumption, which is, I think, reasonable, but by no means certain, if you make the assumption that the aftermath of where we have been today is going to parallel the reactions of the aftermath of similar episodes in the past, the message that I would take from the history is that this is not the time to bail out. In fact, and there's a wealth of historical evidence of this, Jeff, that the most opportune buying the best buying opportunities typically occur in periods of high volatility. The Warren Buffett phrase is you should be greedy when other people are fearful, and certainly people are fearful now. And the data are pretty convincing on that. To say if you buy in these high volatility environments, you typically have realized good returns a year later. Now, that does not mean you realize good returns a month later or 2 days later. So the trick is, if it is a trick, or the requirement is that you have to be willing to look at the intermediate or long term. If you're focused entirely on the short term, you're still apt to be in some uncomfortable returns, and that's important to realize that, because with volatility at the level we have now, VIX yesterday I think this morning is in the 60 range, or 60 handle. It's been as high as 80. That's about 3 times greater than its historically normal level, which means that the market is expecting day-to-day volatility to be 3 times bigger than it typically was. So if a year ago we would have said, well, 1% move in the S&P 500 is a big move, well, now it's 3 or 4%. So those you should expect bigger near-term moves, both upward and downward. That's sort of what the market is expecting. But as I said earlier, based on the dynamics that we see, looking out a year, you might expect to do okay.
Yeah, I think it's certainly a time of reflection, especially those. I'm thinking, our shows is we talk about pensions and we talk about, at the very high level, institutional investors, but the show's about individuals, and I think now's the time to assess your risk tolerance. Right, it's perfect time to reflect and make sure that you have the appropriate risk tolerance, but also to be steady and think about the long term.
Yeah, no, I agree. This is steadiness is the requirement at a time like this, and it's easier said than done. The best thing, some of the best advice I could give anyone would be to say, don't go online and look at your accounts. Don't necessarily open the statement if you get it in the mail. It doesn't, unless you're planning to sell stock this year. The fact that stocks are down doesn't really affect your well-being. Now, having said that that's the advice I would give. I will also confess that I haven't necessarily followed it myself because I've looked at my accounts. But at the same time, I haven't, I have traded. And again, I think uh, this is not the time to make important investment decisions. This is a time to say, okay, if I had a long-term policy, if I had a target asset mix that I was happy with 2 months ago, I can continue to be happy with it. I don't need to liquidate just because the market's gone down. In fact, as I mentioned, after this much volatility, typically the market goes up a year later, not continues downward. So steadiness is, it's always true, yeah. But but it's particularly true in times like this. Just having a long-term policy and staying with it. And we see in our day-to-day emotions in the last month, we see why that's so hard.
Yeah, absolutely.
Because it's easy to get for your emotions to get the better of you. It's happened to me. You just look at it, oh my gosh, this is terrible. When is this ever going to end? A natural reaction.
Yeah.
And you have to force yourself to step back and look at the data and say, okay, well, when these things have happened in the past, what has been the subsequent movements in the market, and it's in the long run, it's encouraging. And remember, we talked earlier about the peak in the market, the S&P 500 on February 19th. That's an all-time peak. Mm-hmm. If you sold stock on February 19th, no one ever got a better price. That incorporates the tech bust. It incorporates the financial crisis. It incorporates all sorts of things. So incorporates 87 when the market went down 25% a day. Yeah. So the long run trend is in your favor.
Yeah, and I would say turn off the TV, turn off the computer. The thing that always gets me is when you turn on the networks and you see it's superimposed. I mean, there's lots of graphics. It's very stimulating to the eyes, but a lot of that stuff can be misinterpreted if you don't have the supporting data to back it up, right? I mean, you don't know the context by which you're looking at a lot of those things.
Yeah, no, absolutely, and I think the other part of it, and this is just, you make a great point, is that in many respects, prudent investing ought to be boring. I mean, if you as an individual or an institution, if 10 years ago you would put all of your equity money in an S&P 500 index fund and just left it there, come high, come low in the market, just left it there, that strategy would have outperformed something on the order of 75 to 80% of all professionally managed equity portfolios. But it's boring. It doesn't make for good journalism. I mean, you can't turn on the TV at noon and have somebody say, well, what are you doing, Jeff? And so, well, I'm just holding my index fund that I've had for the past 10 years. I mean, that may be the best investment policy, but it's crummy journalism. Yeah. And so that's why, you turn on the TV, you see people who are encouraging you to trade or to do stuff because those are stories.
Yeah. I agree with you, and I think that it'd be better take a walk or do some exercise.
Yeah, exactly.
Well, Craig,
read a book, whatever.
Read a book or chat with your partner, or pet your dog, or cat, or play with or teach your kids. Well, Craig, we're going to have to leave it there. I certainly appreciate you making some time. Stay safe and best of luck, and we'll talk to you again very soon.
Thank you, Jeff. It's great to be with you,
Thanks,
as always.
Take care. Welcome back, and I thought that was an interesting segment with Craig Lazzara from S&P, and we're going to shift gears a little bit and now talk cryptocurrency. So we talked markets, we talked stimulus, but joining me on the line, you know him very well. He's the co-founder of Delphi Digital, Mr. Kevin Kelly. Hi, Kev. How are you?
Doing great, Jeff. How about yourself?
Doing okay. Hanging in there, all things considered.
Yes, sir.
It's been an interesting and wild ride in markets, as you well know. And I'm happy we could connect because I wanted to talk a little bit more. One of your areas of expertise is crypto, and you guys do a tremendous, and the folks at Delphi, the team, do a great job kind of tracking and doing research on the crypto market. So what's happening there? We've got, we had a lot of talk about digital currency over the last year. This market's been extremely volatile. But what's going on in the world of digital assets?
Yeah, so I mean, it's as isolated as it can be at certain points. Certainly when you see, a liquidity crisis develop, and then, general financial markets and volatility kind of blow out across the board. Crypto, and like you would expect, isn't necessarily isolated from that. So, the last month or so has certainly been, a painful time for crypto investors. But again, we've seen that across different asset classes. I mean, Bitcoin certainly, took a pretty sizable dip from, kind of the middle of February
Hmm.
until now when you had the market really sell off. But, what's interesting is that a lot of these companies, if you think about the ethos of digital assets, really crypto assets that it's built upon, the ethos of kind of building things in a decentralized way, decentralized governance, this whole kind of concept of decentralization, right? Which by definition is not having a centralized entity. A lot of these projects are still, funded by whether it's centralized teams, VC investors who are backing some of these centralized teams and projects. So, it's certainly something that's, I think, of this type of market environment continues, which we expect it to, at least for the foreseeable future. We've had dozens of conversations with different projects who are either trying to draw on, if they're fortunate enough to have some type of credit line, trying to draw on that, but also really kind of a few of them scrambling to try and come up with some funding, because again, having some of these BVC subsidized as they're building out these decentralized networks and protocols, when you have, a market environment like this where conversations really get kind of put on pause or postponed, that can have some real kind of negative ramifications for, again, projects that still need money to, build these things out. So at a very kind of primitive level, the crypto markets and digital asset markets aren't isolated from, what's going on in the broader kind of macro context.
And, Kevin, I think I've been reading about the Congress and a lot of regulation. I mean, is it your sense that that is put on hold? I mean, obviously the Congress today, we're talking on Friday afternoon, it's about 1:30 p.m. Eastern time, Congress taking up the stimulus bill. But I have been reading about the regulatory environment and Congress and the IRS and SEC taking a look. Do you expect business as usual, that to continue? What's the impact on cryptocurrency there?
Yeah, I think, I mean, for right now, obviously, lawmakers' priorities have certainly shifted, and I guess you could say their priorities have been realigned within the last couple of weeks. Again, really trying to get, first and foremost, the stimulus bill passed and out there, and enacting, actual real fiscal stimulus to help, an economy that's already starting to struggle, especially in various pockets of it. But when it comes to kind of crypto regulation, things of that, I mean, I think, in the next 3 to 6 months, you'll certainly see things normalize quite a bit. You've actually had some conversations around this fiscal stimulus bill revolving around, a potential digital dollar or central bank digital currency
Hmm.
that would kind of digitize the dollar, and that we've talked about, a few times on this show already. So that from that perspective, I certainly think there's a lot of potential opportunities to accelerate the creation and adoption of something like, central bank digital currency or digital dollar. But when it comes to kind of broader crypto regulation, right now there's nothing, at least from where I'm sitting, too crazy or too imminent that would really disrupt the market, I guess you'd say, because it's just simply priorities right now, across the board for lawmakers is certainly more focused on, just keeping the economy running at this point.
But in terms of, I mean, so many Americans, most Americans are now, except unless they're on the front lines, are working from home. Um, they're not going into work. We're waiting for the stimulus bill. Does that put? I would think that cryptocurrency is not in that situation because most organizations that are sponsoring or working on a crypto asset, they've been working. This is in the ethosphere, right? This is not like
Hmm.
in the ethos. So this is not something that, in my mind, would be disruptive to the crypto market. But maybe obviously then the volatility you're going to have regardless because it's part of the broader market. But the development and the maintenance of the blockchain technology and the cryptocurrency, I would think that all has been done remotely, and the
Hmm.
businesses would excel.
Yeah, no. I mean, absolutely, really good points. And when I say disruption, it's more so again from that kind of funding aspect, right? And so, for example, just similar to any other industry or kind of the startup world, if you were having conversations about raising capital right now, unless you were pretty far in those deal arrangements, a lot of those have been put on pause or on hold, right? So even some of these crypto projects that are working to build out this technology or build out these protocols, if for example those conversations were just in their early stages, that next round of financing potentially could have gotten pushed back, which again can have trickle effects within the crypto space itself. I mean, the volatility aspect is an interesting one because a lot of these projects also by nature of aligning their incentives with the stakeholders that they're trying to appease to with these native tokens and these protocols that they're building, certainly hold a good amount of their own native tokens on their own balance sheet, right? The project or the company's balance sheet that's building this out and backing it. And so when you have 30, 40, 50% drops in some cases in terms of asset prices on these balance sheets, again, that funding issue potentially can come up. So it is a really good opportunity if you're trying to find the silver lining here. It is a good opportunity to kind of reevaluate the space and look at projects that again have the runway and the conviction to continue to build out what it is that they initially started to build out for the next 12, 18 months, right? And I think that's where the rubber's going to kind of meet the road here soon, and that you'll probably see a good amount of projects either consolidate with other teams or actually kind of close up shop because they simply just don't have the funding or the runway to be able to do that.
Kevin, your team does a tremendous amount of due diligence, and I would imagine prior to this you were doing in-person meetings and you were traveling and meeting people. How has the due diligence process and the research process changed now that you all are working separately? You're working from home. Your team is working from home. Just, you don't have to overshare, but what are some of the changes in terms of your business practices to get that information that you need?
Yeah, it's a great question. I mean, what's unique about this space too is a lot of it operates, as you mentioned, remotely already, right? So before this, yes, we had a lot of in-person meetings, especially some of the project teams that were based in New York where we're headquartered. And certainly there was a good amount of travel with, conferences and going out and meeting with some of these projects in different cities. But luckily, a lot of this actually takes place remotely already. And a lot of the discussions happen, in different mediums like Telegram, for example, or Discord or things of that nature. And so it hasn't been a huge disruption, quite frankly, in terms of the due diligence process, because that's oftentimes how we communicate pretty consistently with a lot of these teams anyway. So between the calls and actually, having these different messaging platforms really kind of take off, that's certainly helped us, kind of keep the engine and the machine running, even at a time in which, obviously it's mandated isolation at this point. But no, I mean, it hasn't really affected the due diligence process too much, luckily.
Yeah. Well, Kevin, these are obviously extraordinary times. Hopefully by the time that this airs, we'll have the passage of the stimulus bill. And on to the next thing as we try to get Americans back to work and we try to keep people afloat in terms of the economy. And hopefully we can, knock on wood. I think there was someone knocking. I don't know if it was you knocking on wood, but I think knock on wood, that'll happen. So
yeah, amen to that.
absolutely. Well, stay safe, Kevin. Always a great talking with you, and we'll have you back on the program next week.
You as well, Jeff.
Thanks, bud.
Have a good one.
Bye. Welcome back. Now we're going to shift gears to personal finance, and joining me on the line is Mari Backman. She is a personal finance reporter with The Motley Fool. Hi, Mari. How are you?
I'm doing okay, Jeff. How about you?
I'm doing okay, all things considered. How's managing at home and working with your husband, and you've got the kids home? How's that going for you?
I think like everyone else in this boat, it's a little bit of a challenge, but we're kind of powering through it, making it work. Obviously, we're very grateful to be safe and secure at home. The fact that we have a backyard helps. We get out a little bit. The kids get to run around, get some air. So we're hanging in.
That's good. That's good. And then are your children getting lessons, e-learning lessons, or how is the school work? Are they off for the week?
No, they're actually doing school online, and it's counting toward the required days to that the district has to meet. So that's good, and they're learning some stuff, and their teachers are checking in, and they're doing these Zoom conferences with their teachers. So it's nice. They're staying connected. It's a good thing.
That's good. I think there's a lot of parents there out in the country probably around the world, because there are many 150 some odd countries that are impacted by this. I'm sure that it's difficult for parents to balance work and parenting. Always, it was already difficult. Now it's even probably more challenging.
Yeah, absolutely.
So let's jump into it. I mean, we're here to talk about personal finance, and obviously a lot of things going on as of our conversation. We're waiting on the passage of the stimulus bill, but we've already had two other stimulus bills pass, or stimuli bills, whatever the right wording is. But what's top of mind for you? Because you're on the personal finance beat. So what can you tell us?
Well, unfortunately, despite a stimulus package, a lot of Americans right now are out of a job. A lot of small businesses are closing or have had to close because of what's going on. So you're seeing layoffs left and right. Some states are saying that their unemployment online filing systems are just inundated with claims. They're crashing. They're overwhelmed. So a lot of people out of work right now. And I thought we would maybe just spend a few minutes talking about what you can do if you're in that situation where you're out of work, you can't pay your bills, and you need help.
Yeah, absolutely.
So,
Please.
yeah, so I mean, first of all, the number one thing to do is to go file a claim for unemployment benefits. Those states that are seeing a huge uptick, what some of them have done is now they're giving designated filing hours. So, for example, if your last name starts with A through F, your day to file might be Monday, or your window to file might be daily between 9 a.m. and 11 a.m., something like that. So just pay attention to what you need to do in your state and get that claim in. That's number one. But then, number two, obviously that'll put some money in your pocket, but unemployment will not replace your entire paycheck. Generally, it'll replace 50% or less. So with regard to your remaining bills, there's some relief to be had. So let's go through some of the bills, Jeff, that some people may be worried about right now.
Sure.
So let's talk mortgages and rent. Okay. So a lot of mortgage lenders right now are allowing loans to go into forbearance. That basically means you just hit pause on making your mortgage payment for a limited period of time. That's something that a lot of lenders will work with you on. So if you are in a situation where you can't pay your mortgage next month, call your lender, explain the circumstances, and see if that's an option. Chances are it will be. If you are a renter, and so you don't have a mortgage, you just pay rent, reach out to your landlord, explain the situation. Unfortunately, if you're dealing with sort of a mom and pop landlord situation where maybe, your landlord is, just this nice couple who happens to have a second home and they rely on your rent as their income, you may not have the same amount of flexibility as someone who, pays rent to a big property management company or pays rent to a landlord who's got, 40, 50 tenants in an apartment building. But either way, it does pay to reach out to your landlord, explain the situation. Your landlord may agree to negotiate. Your landlord may say, okay, pay me what you can today, or pay me 50% today if you can, and pay me the rest when your first unemployment check comes in, or they'll probably try to work something out. So it's worth making.
Yeah, and I hear what you're saying, Marty, because people are dependent on those rental payments or those mortgage payments to keep themselves sustained, and even more so now. But I agree, opening those lines of communication, really, really important, whether it's with your bank, whether it's with your lender, whether it's with your landlord.
Exactly. And along those lines, so there's a lot of people who have monthly loan payments, whether it's a credit card balance or a personal loan, an auto loan, or a student loan. So one important thing people should know is that if you have federal student loans, you basically are allowed to put them into forbearance for the next 2 months. So you do need to contact your loan servicer and just request that. But what I'm hearing is that basically you just put in that request and it's going to happen. So if you're paying a federal student loan, you get a 2-month reprieve. It doesn't mean that those payments are wiped out. You'll have to make those payments later on. You just don't have to make them right now. If you have private student loans, you need to reach out to your lender and ask for the same provision. You may or may not get it, but chances are your lender will work with you to some degree. And the same holds true really, again, if you can't make your minimum credit card payment, if you can't make an auto loan payment, just reach out and ask for help, because really a lot of businesses now, they are very understanding that this is an unprecedented situation and people are just out of work and they need relief.
Hey, think about the domino effect. If you don't pay your mortgage, if you don't pay your car, you could potentially, or you potentially go into bankruptcy. That disrupts the payment flow for them, their revenue flow, the business revenue flow, puts them at risk. I just read something, Mari, where I think it was the Cheesecake Factory said they were not able to make their rent payments to their landlord in their over 300 locations. And that's just an example. Like if you are a commercial landlord and you're dependent on property a rental from rental payments from a big corporation like that, that puts your property at risk. That you may have other payments as a business that you need to pay. So I think these are very extraordinary times, and I think people are, just my assessment, people are going to be willing to work with people. I think you have to be open-minded here.
Yeah, I think that's the only way to do it in a situation like this because, I mean, right now you're talking about millions and millions of people who are suddenly unemployed in one fell swoop. It wasn't gradual. Basically, once, states and cities started issuing, lockdown orders, I mean, businesses started closing left and right. And so it wasn't like this gradual trickle. It wasn't like an economic situation where, okay, the economy is starting to decline a little bit, so over time this business is impacted and that business is impacted and that person's laid off and then that one is. That's not what we're dealing with here. We're basically talking about, mass closures and unemployment really in the same 1, 2, 3 week period. So I think, just for the sake of not having everything totally collapse, I think everyone's got to be flexible. And, a lot of states are also on the unemployment side. Usually there's a waiting period where you apply for benefits and you need to wait a certain amount of time before you get your first payment. And some states are even waiving they're waiving the waiting period. That's hard to say. Waiving the waiting period for benefits because they realize that people are just so desperate. These layoffs came out of the blue, And that's another thing, Jeff, during a typical recession, you sort of get these warning signs that you may be out of a job. And I think we really didn't have a ton of warning about the situation. It's not to say that there weren't signs that, COVID-19 was popping up in the U.S., but I don't really think most of us expected such a major upheaval to ensue within like a 1 week time span. So I think just because of like really the extreme nature of what's going on here, I really do think that anyone, that you owe money to during this time will probably be somewhat flexible in altering your payment terms. Again, whether it's letting you hit pause on your payments, whether it's giving you more time to submit your payments, whether it's accepting partial payments, maybe some loan servicers will waive interest temporarily. There's different options to play around with. So I think the takeaway here is just if there's a bill you can't pay, really no matter what it is, just reach out to that biller and ask what your options are. I'm hearing that telecom companies are giving customers more time to pay. Utility companies are suspending turnoffs for non-payment. So you're not going to get your lights turned off in the next few weeks if you can't pay your bills. So just reach out.
Yeah, absolutely. Good. And also, I was going to say it was a good suggestion, but also that flexibility, trying to find that inner calm, because we have been bludgeoned over the head with markets, health, and this is not in any particular order, but with all these things that have just really uprooted a lot of people, unfortunately. A lot of people like us are not able to work remotely. They may have to be on the front lines. They may have to be healthcare workers or police or MTA workers. But a lot of people have been hit hard by this. And I think trying to find that inner calm is really important, and being able to work with other people. Those are really important skills. So let's people should try to do that. Well, Mari, always a pleasure chatting with you. Thanks so much for taking time out of your day. I know you're managing the family, managing your work, and managing the kids. I know that cannot be easy, so we certainly appreciate coming on the program today.
You know what, Jeff, I have to tell you that first of all, it's always great being here, but I'm extremely blessed to be in a situation where I can continue to do my job from home. As you know, I do work from home as a general thing, so obviously that wouldn't change in this situation. But I'm just grateful to, to be able to keep getting a paycheck when so many people are unemployed, and also to be able to keep getting a paycheck at a time when many friends of mine are, doctors, nurses. They're basically going into hospitals, and they're dealing with this outbreak actually on the front line. So I think it's a good takeaway for all of us. Let's, those of us who are still working, let's be grateful for what we have, and for those of us who aren't, help is out there.
Absolutely. And the most important thing is your health. If you don't have your health, you have absolutely nothing. Mari,
Exactly.
always a pleasure chatting with you. Thanks so much, and we will talk to you again very soon. Take care.
Bye-bye.
Bye. Welcome back, and now we're going to shift gears, talk a little technology, and joining me on the line, Senior Technology and Consumer Products Reporter with The Motley Fool, Mr. Daniel Klein. Hi, Dan. How are you?
Oh, hey there, Jeff. This might be the longest stretch of shows I've done from home, pretty much ever.
Yeah, well, I think you're like many Americans. I mean, we are all home waiting, I guess, for this 15 days to be over and to see what the results are, but I think a lot of people are going a little stir crazy. But I appreciate you coming on our program, so thank you so much.
Yeah, I'm happy to talk to another human being at this point.
Well, I mean, you do have your wife and son, but how is that going in terms of working from home? I know we talked about that, I think, earlier in the week on the network. How's that going?
It's really interesting. I actually wrote a piece about this for one of our sites, and during the regular day, my wife and I, she's at work, I'm at home or at a coffee shop or at my office, and we don't communicate that much. Maybe I send her like a picture of the cats or something, but I never know when she's in a meeting. She doesn't know what I'm doing. Now, because we have in the house one office, and we both have video calls and I have media appearances, we have had to coordinate our schedules. So there's a lot more communication in that sense. But during the day, we've kind of taken a let's be strangers approach. I mean, if we're both stopping to get something to drink at the same time, maybe we'll chat a little bit. But we both have work to do. We're very lucky in that. We both have obviously some parenting demands, though this was a school vacation week, so they're not doing any at-home learning until next week. And it's been challenging, but I feel like we've actually seen less of each other, despite the fact that we're working, like 10 feet apart most of the day.
That's interesting. And I know my wife, I have a married and I have two cats, but we sometimes work together, sometimes we're not. In fact, while I'm recording this, my wife is sitting here near me. And so I think people are dealing with that. How's your son? He's 16, if I recall. So how's he dealing with all this staying in and stuff?
Yeah, he's bored. It's funny. It's the first time I've ever heard him talk on the phone to another kid. I think he's actually FaceTiming,
Okay.
but that wasn't really in his playbook. He might text message or, communicate in a video game, but there's definitely been, I would say, a positive change in social habits, given that, this is a generation that they don't communicate all that well because they're used to sending a happy face emoji instead of talking. So I do think that's a good part of it. Look, it's not ideal. We're trying to get out and take a walk or go to a drive-through. It's, still relatively calm here. I've been working out outside, and, we're lucky that our building has a pretty good park around it.
Yeah.
So you can be outside and still be social distance. Our pool is open, though you're supposed to stay obviously 6 feet away from people. We haven't used it, but certainly might throw a football or something during a slow time over the weekend. So we're definitely luckier than most in terms of our situation.
Yeah, hopefully, I know other people probably in some rural or urban areas probably dealing with some of the similar challenges that all of us are dealing with. So, Dan, I know you wanted to talk about supply chain, and we were talking offline about Amazon and ordering products, and there may be some delays. Based on your analysis, what can you tell us what's going on with the supply chain for many important goods that people are getting or requesting?
Yeah, so it's important to remember that the supply chain is built for Americans to buy a normal amount of groceries every week. And when we traditionally have had a crisis, that crisis would be regionalized. So if there's a hurricane that hits Florida, you can pull capacity from, I don't know, Massachusetts or Georgia or Texas to fix the problem. What's happening here is there's no shortage of toilet paper. There's no shortage of ground beef. All of these things are being produced. It's just a challenge to get them in the quantities people need to the right places and to the warehouses. So what Amazon has done is they've deprioritized certain items. I know that I ordered a cable, an Ethernet cable. The ones I have are too long. I wanted a shorter one for my office because I'm using my co-working space. I have a private office to record some television because it has a faster connection. And that cord isn't showing up until like April 20th. If they didn't already have it in stock, they've asked vendors to hold off until I believe April 5th on non-essential items. That gives them more capacity to fill Whole Foods, to fill their warehouses. And I'll say Amazon has done a tremendous job in fulfilling orders on basics. I know that I went in and placed orders for toilet paper that were May 15th, April 30th. They were very far out, and I figured, well, by the time they arrive, I may need them. We've since been able to get some normal deliveries from Instacart through Publix. And I've been able to, Amazon has sent me all those orders. They put very far off times, but they delivered them much sooner. So I've been able to help out some neighbors and other people who weren't able to get toilet paper and other crucial supplies. So what I would say to most people is if you need something and it's essential, order it, even if it looks like the date is kind of far off, because you will probably get it sooner. Amazon and other retailers are trying to be cautious. But the Amazon website is built really well in that it will let you order things for when it perceives it will have it, and that allows you to sort of plan ahead. The other thing we've been doing, and I think you've done this too, is we use delivery from Whole Foods. I've been able to get same day delivery, and 15, 20 items, maybe 2 or 3 things are substituted. And I don't really care if I get a different brand of pesto during this crisis than the one I normally use. So you really have to salute the companies and all of the workers that are out there doing this.
Yeah, absolutely. And I know Walmart is actually looking to hire people to deal with this as well. I would just anecdotally, Dan, I would just tell you, like, I live in New Jersey, in Jersey City, right across from New York City. We have tried to use, my wife and I have regularly, routinely used Fresh Direct. We cannot get a delivery date. So what we have done is, and I tried to use Instacart. I've tried to use some of the other services. So we actually went out yesterday. We've been going out once a week to kind of driving out into the suburbs, about 20 minutes away, to pick up some goods. So it's been a little bit challenging, I think, depending on the area you live in.
Yeah, it's definitely harder in big cities. We're lucky here in West Palm Beach that because we have such a density of population in a lot of high rises, that Publix is very over-indexed. I think there's 3 Walmarts within like 5 or 6 miles of me. So there's an awful lot of supply that was already here. We were also towards the end, but we were in peak season when this started, so a lot of capacity is built up. Quickly to go back to what you said about Walmart, yeah, Walmart's hiring over 100,000 people. Most of the companies that you think would be doing well, Costco, Walmart, Target, they are hiring and they're paying a premium. They're paying $2, $3 more an hour than they regularly pay. So if you were a hospitality worker who temporarily lost your job, it's not a bad idea to go work at Whole Foods for a few months and get through this crisis. But all of these companies have been feverishly working to engineer their supply chain to get essentials. So are you going to be able to buy that like surfboard you really wanted? No, maybe not. You might not get that for a few weeks, but you are going to get the things you need, and demand will subside. Once somebody has 4 things of toilet paper in the closet, they're not going to order 4 the next time. They're going to go back to a normal replenishment cycle. So you will see a return to normal, at least in terms of availability. And obviously, you're going to have to be a little bit willing to be flexible. If I order 2 1-pound things of ground beef and they ship me 1 2.5-pound thing and I have to split it up, that's just not that big a deal. And we all really need to deal with this. The other tactic is with Instacart. What we've been doing is as soon as our order is delivered, we reserve a slot for the next order. So you have to put $35 in, and maybe it's 7, 8 days away, and then you can add to that order as you go. So we've been doing that, and our success rate has been nearly everything. I mean, I was shocked. I made fresh salmon for dinner last night. I did not expect them to have that in stock.
Yeah, that's amazing. And another thing I want to point out, I was reading something online, Dan, I want to get your take on this. Obviously, protecting our frontline workers is important. We've heard about, getting gloves and the right masks to the people in healthcare. I've been reading that the stores like Walmart and Whole Foods are now creating almost like plexiglass that will go around the checkout counters to protect people who are checking you out, checker
Yeah, so
outers.
a number of chains have installed essentially sneeze guards
Yeah.
around their workers. Target is sanitizing the checkout area between each person. I mean, look, companies are doing what they can. You can get pickup at Target or Walmart. They will put it right in your trunk. You don't have to see the person. There's obviously a shortage of needed supplies.
Hmm.
So anyone who can help, create supplies, if you have a 3D printer, if you can knit, there's lots of different ways you can find out on the internet to make useful things. And if you don't need it, don't hoard supplies. I have a cousin who's dealing with some health issues and has immunity issues, and he needs a mask at home, let alone to be out. So the inability to buy some of these things is very tricky. But if you have them, if you can get them, if you can make them, do what you can to sort of lessen this need.
Yeah, I mean, and now I know that my wife and I watch the press conference every day just to get the latest news, and I know the Attorney General was on saying if you hoard stuff to sell, it's one thing if you want to buy like a lot of toilet paper, but if you're trying to hoard it to charge people more, which I don't really get. I mean, I get it, but I don't get it. It doesn't make sense to me. But that is, I don't know, if felony is the right word or if it's a misdemeanor, but you're
Yeah,
going to get fined. I mean, that's
and
just
look, these aren't beanie babies. These are supplies people need. And
yeah,
and look, by accident, I ended up with an overabundance of certain items. And I made sure to ask the people in my world who has a shortage. And I know my trainer, who we've been meeting outside because we've been in close contact for 10 months. So if one of us has it, the other has it. And his parents can't go out and didn't have enough toilet paper. So to be able to just give him some, that felt great. That's better than if I sold it for double. I mean, that makes you like a villain. You do what you can. If you have elderly neighbors and you're going out to shop, call them and find out what they need and leave it by their door. If you're, making food and you know someone might be hungry, feed them. Do what you can. There should be no shame in needing help during what is obviously a terrible time for a lot of people.
yeah, and I've noticed a lot. I guess last topic, Dan. I've noticed a lot of donations by corporate entities, media outlets, and especially tech firms. I think Apple has been donating mass. I mean, all the tech firms are stepping up to donate either technology like artificial intelligence and blockchain and other things to help organize or distribute or help with the supply chain or actual goods and items that would be needed in certain circumstances.
Yeah, and this was the first week where you really saw the wave of the automakers showing how they were going to be able to make ventilators. Dyson Vacuums is making 15,000 ventilators. So, what I think the first easing of this crisis is going to be private industry leading the way. And sadly, it might not happen fast enough for what's going on in New York right now.
Yeah, that's
But
tough.
within the next couple of weeks, the ability to say, okay, there's an extra 50,000 ventilators that can be moved around as the center of this switches, that should be there. And that I think will be the first sign of, I don't want to say victory, but ability to manage this is when we have the capacity to say, okay,
Hmm.
that college dorm or that hotel or whatever is going to be a temporary hospital. And oh, yeah, we have the equipment to deal with it. There's obviously a lot of medical personnel that does non essential things that could be trained to help with this. And we're going to start to see those supplies. And that's all business stepping up. I give government on the national level almost no credit, but a lot of state government. And look, a lot of company leaders have stepped up. Amazon, donating computer power, Microsoft making products available to school kids, also donating cloud computing power. You're seeing lots of positive things and people coming together.
I also think, Dan, that we need to alter our expectations a little bit to even think, you know, that things are going to go back to normal, that we're going to be shaking hands and doing all those things. I think that does not happen, at least not initially and not for several months. I think people need to kind of lower their expectations a little bit. I think, getting out would be a great first step, but I don't see us, I still think that companies where you can work from home, they'll let people work from home because, um, unless you're like essential, like you're saying.
Yeah, and honestly, they should have anyway. So I think we're going to see, we've obviously seen companies forced to adapt tools that you and I have used regularly. I'm lucky that I work for a company that has largely had the capacity to go remote. I mean, we did this as a test as this seemed possible, and we already had the capacity to do what we needed to do. And I think you're going to see more companies say, you know what? I was worried that if people weren't there, they wouldn't work as hard. And oh, wait a minute, they worked harder because they didn't have to spend part of their day commuting, or because they could easily attend to their child's needs while still being productive at work. So I think that kind of shift is going to be permanent. And yeah, society's going to come back gradually. I assume we're going to have empty arena basketball and hockey games before we have crowds. I don't think we're going to have some of the summer music festivals. Those might get pushed to the fall or delayed for a year. But are movie theaters going to reopen? Yes. Are restaurants going to reopen? Yeah, there might be capacity changes, there might be new procedures, but this will pass. There will be travel again. I've spent some of my most fun time in the past few weeks planning a who knows what date Vegas trip with a colleague I travel with. And normally we go for work. This time we're going just for fun, as soon as it's safe to do so. So normal will come back. And yeah, might there be more fist bumps? Sure. But have we given up hugging as a society? I don't think so.
Yeah, I mean, I think that I didn't mean to say that we're not going to be hugging, but I think we're going to be we're very selective, at least in the short run, about who we hug. And I'm looking at my wife as I say that. So, well, Dan, I'm
I,
going to let.
I honestly think you always should have been selective about who you hug.
Well, yeah, I know, but sometimes it's a different time. Anyway, Dan, look forward to having you on the network on Tuesday, and stay safe and get that workout in. We'll talk to you soon.
I'll see you then.
Bye. Welcome back, and we're going to shift gears now, talk a little retirement, of course, because we're part of the Broadcast Retirement Network. And joining me on the line is Miss Alessandra Melito. She's a retirement reporter with Dow Jones Market Watch. Hi, Allie. How are you?
I'm good. How are you?
I'm doing well. I'm sitting here, and my cat is staring at me at my computer. My other cat is sleeping, but he looks like he's about to jump on me. But other than that, I'm doing okay, all things considered. How are you and your family doing?
Pretty good. Just, staying inside, only going to the supermarket.
Yeah,
Yeah.
yeah, it's obviously certainly difficult and scary times. But that doesn't deter you from doing your job, and I know you're a very passionate reporter. What's top of mind for you and the folks at Market Watch this week?
Yeah, so just about everything. There's there's been news literally every other minute, and sometimes it's about the stock market, sometimes it's about stimulus packages, sometimes it's just about the effects of the coronavirus on businesses and individuals, in every capacity. But for me, in the retirement section, I have been doing a few stories balancing between how volatility will affect your retirement account, how the stimulus check will, or rather the stimulus package will affect you if you're a retiree. And I've also been doing a lot on just old age and the impacts the coronavirus has on family members, because a lot of nursing homes have been put on lockdown as a result of the coronavirus really having a harsh negative impact on the elderly.
Yeah.
Sorry. So a few stories have been really touching, kind of sad, but really touching. I wrote about this one piece on how people can cope if they have a loved one in a nursing home. I spoke to a few people who have family members, like their dads are in nursing homes, and just overall the impact on on the family members. I also did a story on how to grieve properly. So that was something that I was really proud of, that piece, because a lot of the times we're thinking about the coronavirus and how it could, hurt or kill the elderly or people with underlying issues. But, two of those things that are definite in life are taxes and death.
Yep.
And that means that people are passing away regardless, So
unfortunately, with the lockdowns and the quarantines, people can have funerals the way that they're used to, like the traditional rites and rituals and things like that.
Mm-hmm.
So I spoke to people about how they're conducting that. So it's kind of an upsetting topic, a little depressing, but also important because, this is something that a lot of people have to process these days, and they don't have the support system that they're used to. In fact, some people, I spoke to some funeral directors, and they're planning funerals over Zoom. So Zoom is basically thing with video chat. It's taking care of business meetings and family and friend conversations, but it's also helping people have funerals. So I spoke to a psychologist about how to grieve and how the coronavirus is impacting people in that capacity, and it was just a really touching conversation she and I had.
Yeah, and I think you bring up, and I love talking to you about market volatility. I love talking about legislation, but certainly if you have a loved one, and think about the impact, Allie, on the elderly if they're stuck at home and they cannot see, stuck in a assisted living and they can't see their loved one. That we are social creatures, and we love, even the most introverted of us, and I count myself among them as being introverted, but we do need other people, and it can be really hurtful. And I'm wondering if you found that any technology, like you mentioned Zoom in terms of the funerals, but if funeral homes can, or FaceTime or things like that can be used to kind of keep in touch with grandchildren and children and parents.
Yeah, so it really depends on the nursing home and the staffing situation.
Mm-hmm.
Some nursing homes do not have the bandwidth right now to set up teleconference meetings with loved ones. Others do, like they already had it in place. So, before all this happened, so they can just easily flip a switch and get people talking to their family and friends.
Mm-hmm.
There are a lot of people who are actually going up to windows in nursing, by nursing facilities, and waving to their loved ones, that way they can keep the distance. But it's been really hard on the family members because not everybody has that ability, especially if they don't live in the same state. So there's been a lot of unintended distancing that way, and it's really put an emotional toll on loved ones. At the same time, though, the ones that I spoke to, at least, they were happy that they were happy that at least the nursing homes were taking these precautions, and they were, restricting access for visitors. They obviously wanted to see their family members, but they would rather not see them and have them be a little lonely than, the negative alternative, which would be, really sick or worse. But it's heartbreaking. I spoke to a lot of people about just how they're feeling and what they're doing to cope, and how they're even insisting that other family members stay away if they can.
Mm-hmm.
One woman, she bought a phone, a flip phone for her dad, because her dad had a smartphone, but he would always let it die. And so she got him a flip phone, and she was like, listen, you're going to use this. And they talk every day now, which has been fun, she said. But, she's obviously looking forward to seeing him in person again. And I spoke to another woman who, she's just super stressed about the situation.
Mm-hmm.
But she is, keeping her distance. She calls her dad every day or every other day, whenever she can. And they talk that way. And really that's all people can do now. The FaceTiming is helpful in certain situations, but not everybody has that ability. So another thing that I had spoken to some family members about is just staying positive as much as you can. It's very hard when you have a loved one in a nursing home, because obviously, they might not be in the best of health and you're not able to see them, and there are so many complications that arise from something like that. But they try to stay positive by, thinking of when this is all over and how they're going to embrace and stuff like that. That's getting them going. So that's been good.
Yeah.
And then as far as the just, people who aren't in nursing homes, but who are supposed to be quarantining, especially, so the older people and people who have underlying health issues, I've spoken with some experts who say that, keep in touch as much as you can. And that really is important, especially in the grieving process, to say, not to say that people, are experiencing the loss of a loved one because of the coronavirus, but in any situation, if you have the ability, call and just make sure that the other person knows that you are their support system. Even if you can't see them, you are supporting them in the loss of a loved one, or you're supporting them in the loneliness that they might be feeling because they can't see their loved ones. It's important now more than ever to stay connected in any capacity that you possibly can.
Yeah. And, I'm wondering, Allie, and I'm not sure this was at all part of the feature, maybe it's a planned story for the future, but estate planning, I would think, maybe has changed a little bit, or will change. And have you explored that? Because I'm just thinking about, like, the digital aspect of it, or, people who are unfortunately inflicted by the coronavirus and making sure that they have things that are updated. Have you sourced that at all? Have you thought about, or have you seen anything on that?
I've spoken to advisors about it, but I haven't written a story yet.
Okay.
I got sidetracked with the stimulus package, but yes, that is something that people are definitely exploring, especially because, well, I mean, honestly, not to be grim, but you're stuck at home anyway. You might as well get your finances in order. So I spoke with some advisors who said that now is also a very good time to be going through that.
Yep.
It has proven helpful for the people who do, who have experienced a loss. They, having these estate plans and these documents all together has been very helpful. There's this one company that I've interviewed the co-founder of. It's called Everplans, and it's a platform where you can put all your wishes and documents in for the future, and they basically said that now would be a good time to do that, not just because so many people are getting sick, but just because with all the different rules changing, tax wise and different retirement bills, it's important to keep your information updated.
Yep.
And also, when you're in the middle of a crisis like this, if somebody, unfortunately is dealing with, a sickness and somebody's incapacitated or somebody passed away, people's minds are not, they're not grounded right now. You're not calm. You're in the middle of a crisis, so you're not going to be thinking, oh, well, I need to remember this, and what's the password to that, and who do I contact about what attorney do I contact about this? So estate planning has become crucial. Yeah. And hopefully, when I talk to you next week, I will have a good story for you on that one.
Well, I appreciate that, Allie. Always a pleasure chatting with you. I enjoy talking with you and your colleague Jacob a lot, and I wish you guys stay safe, and we'll talk to you again next week.
Yeah, talk to you next week.
All right, bye-bye.
Bye.
Well, that wraps up this episode of the BRN Sunday podcast. Special thanks to Craig Lazara of S&P Dow Jones Indices for popping by. Really great discussion, and I really enjoyed it. I want to thank our contributors as well, making time out of their now extremely busy schedules to join us on the line. I want to thank you, the audience, of course, for stopping by as well. I hope you enjoyed what we're doing and found it both educational and entertaining at the same time. Don't forget, we're back again Monday morning with another episode of BRN AM. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.